We're taking a look at the currency market now with Nomvuyo Guma, Macroeconomic Strategist at Standard Bank. Thanks so much, Nomvuyo, for joining us today. Well, we had South Africa's rand gain as much as 2.3% in yesterday's session, touching a near two-week high. And today, some of that loss in momentum coming through. Again, just illustrative of how linked and dependent our movement is on international developments and sentiment.
Morning, Alishia. Yes, absolutely. As far as the rand's concerned, sentiment is always going to be the key driver of the currency's short-term movements. Yesterday, it seems that the market took heart for some statements that came from the leaders of Germany and France that they would step in to help shore up European banks and prevent the possibility of a Greek default impacting on the other nations in the Eurozone. So markets took that news really well. Saw the rand managing to hold below the 8 rand level, so that strength still coming through there. Also, bonds had a good day yesterday. So all really buoyed by global sentiment, which still seems to be pretty positive this morning. So we'd expect another good day for the rand today.
For now, we have investors venturing back into emerging markets. And as you say, on a raft of positive news out of the Eurozone specifically, last week we were asking the question, with a prolonged period of dollar appreciation, the question is not, where you can make money in emerging markets, but where you'll lose the least money. Right now, when it comes to emerging market currencies, where's that value to be found in your books?
Alishia, that's a really difficult question to answer, because at the moment it does seem like currency movements are not being dictated by the underlying fundamentals. As you mentioned, the dollar had appreciated recently, not because it had improving fundamentals, but rather as it benefited from its safe haven status. And consequently then we saw other currencies, particularly ones that are perceived to be risky, so your emerging market currencies, then come off quite substantially. So now that risk aversion has abated, it does look like those currencies are starting to make some ground against the dollar. But for while there's all this volatility in the markets, while the European sovereign debt crisis remains unresolved, it still looks like your safe haven currencies probably remain the safe bet at the moment.
When it comes to event risk on the calendar today, we've got the FOMC meeting in the US, of course, that coming through, and some the minutes being released. And then over in Britain, industrial production numbers coming through as well. On account of that data, just how much event risk does it present for the currency markets?
I don't think that there's going to be too much event risk posed by those two things that you mentioned today. The FOMC minutes, given that there was a press conference held after the last FOMC meeting, the Bernanke went into quite a bit of detail about how Operation Twist would function. So I don't think that there's going to be too much to be read into those minutes, although of course it will contain the Fed's latest forecast and perhaps additional commentary on how they view the US economy unfolding. But at this point it does look like the risk of a recession in the US is starting to recede, so I wouldn't say that there's major event risk attached to the Fed minutes. As far as the UK data is concerned, that is going to be quite key to watch, because of course global growth and expectations of a global growth remain the key feature at the moment. So should those numbers come in far worse than expected, should it look like the UK, for instance, might also be heading closer to a recession, then of course that's also going to be, that could perhaps have a major knock-on effect on risk sentiment, and that of course is then going to impact on the rand.